Okay, so when does it end? When does it all end? When is the selling going to end? When are you going to get this bounce? You came to the wrong place. I don't know. I never claimed to know. For years here on the program, I've tried to explain to people the complete exercise in futility in trying to time markets and try to guess some of this stuff. It's impossible. I do remember the late Mark Haynes on CNBC in 2009, where the markets were just in the toilet, and he goes, I think we're going to turn right about now, and it just so happened to turn. Listen, people, I don't know when it's going to end. I just know it will. You think all of your high quality companies are going to go to zero? Again, I've gone back to this again and again and again, and it holds true. Never bet on the end of the world. It's going to only happen once. Period. The end. With that being said, everything that we've been telling you on a macro level over the past several years has been spot on. Everything. Now, you're going to get periods of time where, again, what's happening doesn't match with the reality of the fundamentals on the ground. And we've dealt with that. We've seen SPACs and companies that have, pretty piss poor fundamentals race through the roof. Tons of liquidity because lots of money is being printed, thrown at these things. It's a problem. Major problem. And again, we saw this all coming. We've been explaining to you, people, what we're going to experience, okay, and this is just the reality. What we're going to experience, and I think for some time, I really do. I think for some time, I don't think you're going to see the indices really go much of anywhere. That's happened before. I've had 10-year stretches where, quite frankly, take a look at the markets as a whole. You look at the Dow, you look at the NASDAQ, you take a look at the S&P. I mean, how long did it take the NASDAQ to get back where it was in 2000? It's going to be very much what you'd like to call a stock picker's market. Now, certain people, they're not getting involved in individual stocks, but there are certain ETFs. I'm not a big fan of buying the indices in market conditions like this. I really think that they're going to flatline for a long period of time. There's too much gunk that has to be worked out of the system. We're not there yet. I talked about this yesterday. I've had this thing that I've talked about, the fallacy of free. How ridiculous the concept of free is. Nothing's free. Nothing's free. I want to reiterate to everybody out there, we're paying right now for the sins of the past few years. You cannot run a modern monetary theory country. You cannot borrow shit tons of money, trillions of dollars, spend it, hand it out haphazardly, this stimulus check, that stimulus check, child tax credit, all this crap that was spread all over the country. It's being paid back now in what you want to call it, an inflation tax. So again, congratulations to everybody who was clamoring for more and more handouts and giveaways. You're paying it back now in higher energy prices. You're paying it back now in higher clothing prices, higher food prices. It was inevitable. And it's difficult for people to get their arms around this. But I keep going back to, I said, imagine if, Joe Manchin didn't push back against Build Back Better. Holy crap. Do you have any idea? Well, you know what would happen? Everything would be party on right now. but we would just have a much, much bigger hangover. We're hungover now. Okay? That's the reality, people. Hungover. Punch bowl's gone. Punch bowl's gone. And we're going to deal with it. It's okay. It's okay. It most certainly is okay if you own quality. So I said, I don't know when the bottom is going to be put in. I don't know when the market is going to turn. It will. It will. And the companies that I own are going to benefit from this. So again, I'm going to give a kind of sign of almost like, I want to sound like a dire type of a program today by any stretch of the imagination, because it's not. You take a look at corporate balance sheets today and you want to make it comparisons to other sell-offs and bear markets and financial situations of the past. There is no comparison. The companies that we own are strong, and they're going to take full advantage of everything else falling apart. As today already, FedEx raising its dividend and up to some 50%. Oracle's numbers coming out yesterday that were fantastic. You ever take a look at the cash on the balance sheets of Google, of Apple, Amazon, the type of money that they can deploy? And they will. They will. It's great. If you are prepared, as I talk about recessions, if you prepare, for these, times that like we have, that we know are going to happen, you're going to be fine coming out on the other side. You're going to come out on the other side stronger than you were before. Now, again, for many people out there that were partying way too hard. See, we didn't participate in the party at Markowski Investments. Yeah, let's just say you go to a party. Yeah, you have a cocktail or two. You're fine, you enjoy yourself, you go home, you're fine the next day. Or you can get shit-faced, and you're going to be paying for it the next day. Well, there was a party going on here, and yeah, we had a good time. Not too good. And guess what? We are going to be fine on the other side. And again, if you got yourself into a situation where your portfolio is laden with all this junk, all this crap, you're going to have to make some moves right now. You're going to have to make moves right now because, quite frankly, many of these companies, it's not coming back. It was funny. I actually heard some of the crypto evangelists today coming out and saying we're going into a crypto winter. And what is this, Game of Thrones here? Winter is coming. Yeah, tell me about it. What was it? Coinbase today laid off 18% of its workforce. They're not going to be the only ones. They're not going to be the only ones. It's going to continue. It is what it is. I've seen this movie before. I know how it ends. And I know what you need to do. Anyway, late yesterday, massive market sell-off yesterday. It really kind of got exacerbated late in the day. Fed likely to consider 75 basis point rate rise this week. They're meeting today. They're meeting tomorrow. I quite frankly, and I gotta admit this, quite frankly, this whole Fed watching bit, it was better. It was better back when we really didn't know that much, and these various different members of the Fed weren't giving press conferences, and everybody's waiting with bated breath, trying to analyze every word that they're going to say. It was actually more fun when CNBC, and it was kind of a joke, did their old briefcase indicator, where you didn't know. What is Alan Greenspan, what's he going to do? And they used to crack a joke. He'd be walking in and they would take a look. How thick is his briefcase? If it's real thick, it's going to mean this. It was kind of like a Groundhog Day thing. It was kind of clever. Now everybody, the entire conversation. Jay Powell said last month that 75 basis points is off the table. And if he decides to raise by 75 basis points, does he lose credibility? And does that think that the market is going to panic? Oh, for crying out. Do you understand how stupid this all sounds? You understand in the grand scheme of things, it means nothing? Nothing. None of it's important. None of it in the grand scheme of things is important. This is akin to the guys on, Fox News or Fox Football before the games discussing the nuances of what's going to happen in a football game. It really doesn't mean much, does it? Anyway, here's a story. Gerard Breaker, editorial, Wall Street Journal. The cost of wishful thinking on inflation is going up too. And he mentions various different wars, foreign policy misadventures, economic, fiscal, regulatory blunders, costly social policy initiatives, which we're great at here in this country. He says they all seem to follow the same pattern. First, denial. The refusal to accept the mounting evidence that we are on the wrong track. Next, complacency. Even when the inconvenient facts are reluctantly acknowledged. A misplaced confidence that a small adjustment is all that is needed to snatch victory from the jaws of defeat. When that fails, a policymaker turns to wishful thinking, a doughy existence on expecting the best in the face of the worst. Everything will be all right. We have a plan premised on all the best possible assumptions. This is the terminal stage. At some point, the full extent of the catastrophe is evident. The inflation disaster unfolding in the United States is the latest proof that we learn nothing from our mistakes. We have clearly now reached the wishful thinking phase of our leaders' management of the crisis. For almost a year, we were told, not by me, of course, by the president, the Treasury, the Federal Reserve, that unholy trinity of economic wisdom, that it wasn't happening. Or if it was transitory. They soon progressed from denial to complacency. It will be fine, they insisted. It was all the fault of capitalists, cupidity, and rapacious Russians, and could be dealt with accordingly. They all seem like they're deer caught in headlights now. Yeah, they do. They do. And I wish to just, all go away. Imagine if, how would the market react? Fed's not going to meet for another 2 years. Have at it. Let the chips fall where they may. Let the bond market react on its own. Take the Fed out of the entire equation. Let the bond portfolio roll off. Again, let the market decide. And we talked about this here on the program, the importance of money being priced properly. You're getting all these complaints now. All these tech companies, they can't get funding. They shouldn't have got frickin' funding in the first place. They shouldn't. Now, I get it. JP Morgan goes out and does a bond deal. It's double oversubscribed. They raise billions of dollars. It's JP Morgan. They're too big to fail. They're massive. They're huge. So what's the risk that's involved? Again, all of these easy money policies have led to all of this. And it's going to take some time. It's going to take some time to work through. Again, reducing regulations, encouraging innovation, encouraging investment, encouraging energy companies to go out there and produce. This would help. It would help a great deal. But quite frankly, with the current crop of characters, I don't see it happening. It was funny. White House press secretary, Karine Jean-Pierre. Karine Jean-Pierre, when asked about the fact that the Dow has lost all of its gains since Biden took office, because Biden was touting how well the markets are doing, saying that Biden is really aware of what's going on. Come on. Does anybody think that Joe Biden is really aware of anything at this point in time? You taking a look at the poll numbers? Young people, young Democrat voters, approval rating around 20-something%. Oh, you don't think that they're feeling it right now? You don't think that they're feeling it? They're taking a look. And they bought into the whole crypto, NFTs, markets racing through the roof, meme stocks, party on Wayne, party on Garth, all that good stuff. And they're getting crushed. I have no idea. I have no idea. I actually have my I have my son working with me this summer. I don't even know how to go about reaching that audience, trying to reach out to them and be like, hey, listen, guys, you're going to have to retrench and do things the right way. You lost a ton of money. You believed all this bullshit, but you have a lot of time. The worst thing you can do is hold on to all of your dog shit and keep doing the same thing over and over again, expecting some sort of different result. But they're ticked. You don't think that they're aware? You don't think that they're aware how much they're paying for gas? Why, you think all the youngsters out there, they can afford Teslas? You don't think they're aware? You don't think that they're aware of what they're paying for when they go out and happy hour on Friday for a couple of beers? They're aware. Anyway, fortunes of crypto billionaires are melting with Bitcoin crash. And again, this is they're talking about these guys that have made all these billions. This one guy, one of the Bitcoin exchanges, what did they say he was worth? Some $800 billion. What? 95.8 billion on paper back on November 9th. Changpeng Zhao. What did he own again? Oh, Binance, founder of Binance, the largest crypto exchange by volume. His net worth now is 10.2. First and foremost, he never had $98 billion. This is one of the things that drive me nuts about these articles. He didn't have $98 billion. His exchange was worth that much. Now his exchange is worth much less. And if I were him, if he could find somebody to sell his shares to, I'd get the blank out. But you can't, because if he starts selling, the thing is going to go to zero. Got it? They never really had this money, okay? It was all a fugazi. All a fugazi. All it was. It's all this thing has been. Again, I mentioned Coinbase, 18% of its workforce getting cut. Hey, we can go on and on and on here. I think it's outside of the crypto thing. EV startup. And again, here is a see I told you so moment. We mentioned this in passing here on the podcast several weeks ago. Electric Last Mile Solutions plans to declare bankruptcy a year after going public. They went public a year ago, and they're bankrupt already. It is a maker of electric commercial vans. They're going to file for Chapter 7 bankruptcy, allowing it to liquidate its assets after a comprehensive review of the company's products and commercialization plans turned up no better option for stakeholders. I can bet that the executives in that company were able to get out of their stock and make a buck or two. Well, you don't think that they knew when they went public that there were issues? Maybe. Maybe they were counting on, Build Back Better and an injection of taxpayer money in some way, shape, matter, form. I don't know. But if that's part of your business plan, is hoping that you get legislation passed so you can take money for the taxpayers, that's a company I'm probably going to avoid. Later on down the road, when regulations and these companies buddy up with the folks in Washington, D.C., and they get regulatory capture, that's a different story. Well, you think they're going to be the only one? They think they'll be the only one. Yeah, the EV companies are out there. I'm still trying to get my, still trying to get my arms around, BMW's EVs and Mercedes EVs and their range, which is like nothing. It's like nothing. And you've got to be kidding me. I'm going to buy one of these cars. Oh, yeah. General Motors. Here was one. Mary Barra, CEO, General Motors. Where's their stock? Their stock is actually now below. General Motors stock is below the IPO price. Below the IPO price from when it went public after we, the taxpayers, bailed them the blank out. After Obama decided to break thousands of years of business, rules, laws, regulate, as far as the pecking order when it comes to liquidations, and decided to bail out General Motors. Government frickin' Motors. Decided to bail them out, and guess what? They're now, the stock is below the IPO price from when they went public. Again, their CEO is all in on EVs. All in. Actually, there was a shareholder question about reinstating GM's dividend, and the response was their priority is to accelerate their EV plans. Oh, you mean the $100,000 plus Hummer? That's a flippin' novelty, for crying out loud. It's a novelty. You're gonna bet your future on a $100,000 plus Hummer? Oh, sure, it's cool. It's neato. But sorry, folks. Tesla is so far ahead of everybody at this point in time. They're currently on over 75% of the EV market. Over 75%. Again, I get the government encouragement that they government encourage General Motors and they put certain rules out there. I don't see much of a future for this company. Again, and I was one of the people back at the point in time said, let it go out of business. You can't do that. Everyone's going to lose. Listen, somebody would have bought it. Just like, you got that electric last mile. Maybe they got some great technology there. Somebody will buy it. Somebody will buy that technology. Said it's liquidation. They'll buy up the concept. They'll buy up the ideas, and they'll do something with it. DeLorean is back. Did you hear about that? DeLorean is back again. They're going to be selling an EV. DeLorean is going to be selling EV, and again, it's probably a niche, and they're going to probably take in, charge an arm and a leg for those cars, because that's what it is right now. That's what it is. Outside of what Tesla's doing, what else out there? I mean, you take a look. I have Ford's Mustang, I guess, is electric thing is okay, but people got a long way to go. Charles Schwab is going to be paying, it's funny, $186 million in a settlement over its robo-advisor business. Again, I don't know what to tell you. You think that some sort of algorithm, some sort of computer, Skynet, whatever it may be, whatever you want to call it, is a good idea for your money? Well, again, Charles Schwab, what they did was they designed the portfolios to hold way too much cash. Way too much cash. Why would they do that? Well, they were utilizing that cash to lend out to other people on margin, and they were making the difference in the interest that they were charging on those margin loans. Am I making this up? No. So you still like those Schwab commercials out there? Huh? The guy used to broker. Schwab. Really? Schwab, huh? How about this? And listen, okay, Schwab's a major clearing agent. One of the clearing agents that I've got to do business with. One of the clearing agents I got to do business with. I know who I'm doing business with. They're not making any decisions, okay? You're going to allow them to make investment decisions for you? Or their Schwab advisors who don't have a flipping clue what the hell they're doing? Most of them are children. Most of them are children, for crying out loud. Whenever I think about that. Sorry, I'm getting off the beaten track. It just popped in my mind. There's the James Bond film when he meets his new he meets his new Q, the kid at one of a British museum there, and they're looking at a painting, and he can't believe how young he is, and he's like, "You still have spots." I guess that's British for pimples. And the kid was just like, "Well, I can do more damage on my computer before you finish your first cup of herbal tea," kind of giving it back to him and talking about when to, do this and that. And Bond explains to him, about pulling a trigger. He said, it's not just about pulling a trigger. It's about knowing when not to pull the trigger. Again, you got to have kids managing your money. They don't know. They haven't been around long enough. They just haven't. They just haven't been around long enough. They don't know, and they just take orders. And they're not, more often than not, they're not smart enough or bright enough to say, wait a second, something's wrong here. They may have a little feeling in their gut, but they're afraid to act on it. Trust me, I was there. 3 decades ago. I was there. Okay? It took me what? Year and a half, 2 years? Year and a half to 2 years to kind of figure out what was up and understand, how the entire thing operated. But anyway, it's a story for another day. The United States is admitting that, again, another see I told you so moment. All of you people out there, these sanctions, we're sanctioning Russian oil and gas. What do we tell you? Do you understand that Russia has made more money? Its account reserves are ungodly sums greater now than they were prior to this war. Do you know that they've been selling all of their energy? Right now, their Russian energy sales are outpacing pre-war levels. So, yay, we sanctioned. We did nothing. Zip, zero, zilch, nada. We told you that other countries would have no problem whatsoever buying Russian oil, buying Russian gas. I'm sure they're buying the vodka and the caviar too. And sanctions to me, for going on, sanction Cuba, sanction Venezuela, sanction this one, sanction that one. Who does it end up really hurting? It's the people. I'm sorry. The people in those countries are the ones that feel it. The people on top, do they? Oh, yeah, all the sanctions we put on Venezuela. Do you think the elites that are running that country, do you think that their lifestyles have changed at all? Oh, no, there's no doubt about it. No doubt about it. The Russian people are feeling it right now. And their economy is down big time. McDonald's has left the country. Somebody else has taken over all of those McDonald's, by the way. Another company has taken them all over, and they're all up and running again. But again, who ends up feeling it? The people. But we keep thinking it's a great idea. Cuba. We're still sanctioning freaking Cuba for what? I mean, how many decades is going to go? Is anything working here? No. Wow. I don't even know how this is constitutional. I really don't. I'm trying to get my arms around this. Fannie and Freddie, another company that, well, again, we had a bailout during the Great Recession. They've been under federal conservatorship, $190 billion taxpayer bailout. Anyway, the Biden administration has implemented a plan. It's called the Equitable Housing Finance Plans. And the things that they want to do is they want to boost minority home ownership no matter what. Now, again, it's Fannie and Freddie. The lending that takes place, who's at risk? The taxpayer. Same way with student loans. Basically, what they want to do, and I want you to get your arms around this, is special purpose credit programs. This is going to assist. I don't even know how this is freaking legal. Assist black borrowers with down payments. Now, let's just say you want to put 20% down. Okay, get a 30-year fix, put 20% down. Fannie's plan would require taxpayers to subsidize down payments for black borrowers. Revenue that Fannie earns on its mortgage portfolio is retained as capital to protect taxpayers during a downturn. Under Fannie's plan, some of that revenue would go to reducing down payments. So we're going to start giving people money for down payments on homes? I guess so. I'm trying to explain how. I mean, just black? I don't get it. This is wrong on so many levels. Another program would support the reduction of borrower closing costs for black home buyers. For instance, via appraisal reimbursements, taxpayers would help finance this support. Fannie also wants to help black homeowners avoid foreclosure by helping them deal with unexpected expenses and repairs or temporary disruptions to income. So now Fannie is going to get into funding home repairs and welfare. Again, you know, the things that we do here in this country, they're so stupid, they hurt my head. They hurt my head. How is this constitutional? How is this right? This is just a special program if you're black. I'm thinking of that movie, The Campaign, with Will Ferrell and Zach Galifianakis. Filipino tilt-a-whirl workers are the backbone of this country. Who are you going to pick out next? You're going to single out certain groups in this country. They're going to get certain subsidies, certain handouts. It's shameful. It really is. Oh, by the way, we'll end with this one. Kids are getting sick. Yeah, children are being infected. This is from the UK Daily and Mail. Children are being infected with up to 3 viruses at a time because COVID measures have worn down their immune systems and made them vulnerable to illnesses, usually only caught in winter. Thanks for listening. I don't know how many "see, I told you so's" I could have on a single day. Anyway, God bless everybody. Watchdog on wallstreet.com. Watchdog on wallstreet.com. We'll see you.